Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. We got a ton of stuff to talk about today. Obviously, we're going to talk about Tesla stock. We're going to break down the electric vehicle stocks, and we're going to go about it in a little bit of a different way. This is a book that I bought a long time ago. It's on business strategy, and we're going to take a little bit of a different look into Tesla and the electric vehicle stocks from a competitive advantage perspective. I've had this book so long that I actually bought it at Borders, which Borders isn't even around anymore. That's how old this book is. It's a classic Harvard professor book on business strategy. We're going to take a quick look at that and break down Tesla and the electric vehicle stocks. We're also going to break down the market. Pretty ugly picture right now over the last 5 days, but is that an opportunity to look to be a buyer or a short seller of stocks right now? We got a lot to talk about today. The stock market's pretty interesting. I got to be honest with you. This volatility is just absolutely amazing. One of the big things that we spotted yesterday, despite that we're down just a little bit pre-market here, is the fact that we hammered down to the downside. And this is a really big thing when you're looking at the markets. There's a famous quote in Reminiscences of a Stock Operator by Jesse Livermore, where he was talking about rallies, and he was calling the reversal in a rally based on how much the stock moved higher, but that move was less than the previous one. So the quote is this, that the rallies grew feebler and feebler. So I just want to take a quick look at the SPY here from yesterday. And you can see that while we pushed down and had this big move to the downside, we kind of stalled. And then this move did not push down, and this move did not push down. So despite the fact that this is what we're looking at over the last 5 days. Let me just bring this into the screen here. And we're taking a look at this. That's the last 5 days worth of price action. That is pretty ugly. We got this is yesterday. This is the last 5 days, right? Not beautiful at all. However, and I'm going to go on record now, this is 7:30 in the morning before the market opens on Wednesday, August 31st. I think the dip buyers are going to step in and buy the dip today. I think that we're due for a little bit of a relief rally. If the short sellers still had some firepower, we would have actually gone down yesterday afternoon, and we did not go down further yesterday afternoon. So the big number in the stock market yesterday, mostly from the first hour to 90 minutes. If you happen to be trading the market yesterday, and especially you understand short selling, yesterday was a pretty good morning to trade. I think Brian Carr is here. Brian had a fantastic morning yesterday. Hey, Andrew, good morning. How's it going, Andrew? Good morning. Good morning. John Bates, my pal. John just moved, still moving in. So anyway, we got a bunch of stuff to talk. We're going to break everything we just talked about in a lot more detail down. Just stick around in just 1 second. Okay, so thank you so much for joining me. I want to first cover, we're going to talk about Tesla, and I want to talk about this book. If you've never seen this book before, it's called Competitive Advantage, right? So Competitive Advantage by Michael Porter. This book and business competitive strategy, this book is probably considered the Bible of business strategy. So there's business strategy and there's competitive advantage. This book specifically, and how we're going to talk about Tesla today, and break down Tesla and the other electric vehicle stocks today. We're not going to talk about the financials today. We're not going to talk about all of the other stuff, Elon Musk and Twitter and his now lawsuit that looks better today than it did yesterday because of the whistleblower. Some legal experts are saying Elon Musk has a little bit better chance right now. Here's what we're going to talk about. We're going to talk about competition, and there's something with Tesla and Tesla stock that has a huge leg up on everybody right now, which is first mover advantage. They are pretty much, everybody knows how to Google it. You don't say search it anymore. You say Google it. Tesla right now is synonymous with electric vehicles. No matter how much other car companies are trying to catch up, they are synonymous. They are the verb for electric vehicle stocks. The other thing is the expansion that is now just starting globally that is going to increase their revenue even more. So we're actually going to talk about it again. Michael Porter, probably the #1 book. We're going to talk about whether or not the other areas of the other competition that they have can catch up, and whether or not it's really going to affect. When you have that big of a head start, it makes a gigantic, gigantic difference. Just look at Apple stock. Think about even Microsoft going after Apple. I'm going to ask you this right now, and it's kind of funny. Raise your hand if you're still using I think it was called the Zune or something like that, Microsoft's version of the iPod. Tesla's got a big head start. So here's a couple other things we want to take a look at. We're going to take a look at here, Rip Higher, German Gigafactory. So we got more expansion, right? This guy puts out a price target here of 375 on it. 375 is based on where it is now after the stock split. I can see what he's looking at. I mean, one of the biggest things, and this is actually a big lesson for everybody as well. Everybody knows in classic technical analysis, when you're looking at stock charts, you draw your resistance all the way up at the top, wherever it went up to. You draw your support all the way on the bottom, wherever it went down to. That's partially right. And I want to get this across. Your job, my job, when we define support and resistance levels on stock charts, we have to not just look at the highest level or the lowest level. Our job is to take a look and see, where did buyers or sellers spend the most time? Where or buyers or sellers did they do something significant? But here's the big question. Where are they having problems with getting through that price in one direction or the other? Now, if you're an active day trader, like a lot of members in our Discord community, we know that that's the opening price from a daily perspective. Then you kind of zoom that out a little bit more to yesterday's high, yesterday's low, and you really start to understand tape reading in its most purest form. But we're looking at Tesla and we're looking at the actual price. And if we could zoom this out now, basic technical analysis says that we'd be looking all the way up here, right? I can understand that, but that's a rookie mistake. We want to look at the price that it keeps stalling out. It got above this price and failed, got above this price and failed, got above this price and came right back in, got right back up to that price and failed again. So we're looking at right around the 380 level in Tesla right now. So this price target came in at 375, still looks pretty good. Now we also have the expansion in Japan. So there's so much more going on. And Japan has still got the COVID lockdowns and everything like that. It really has not even started to kick in yet. So we're taking a look at Tesla and we're looking at the bigger picture, again, from a competitive perspective. It's critical that we look at the likelihood of revenues continuing and the likelihood of growth continuing. Now, there is something where Michael Porter talks about the 5 forces, and competition or switching costs are a big part of that. Now, look, we all know that buying an iPad, an iPod, or iPods don't even exist anymore, or a iMac or an iMac Pro, you're going to pay up for it. You're going to pay up for it because it's the standard. So when you take into consideration that Tesla is the standard in electric vehicles, it's almost a status symbol. I was actually watching a video yesterday here on YouTube where somebody was interviewing people that owned brand new Tesla cars. We're talking about people that had $35,000 to $40,000 in annual income owning a $100,000 Tesla. It was absolutely insane. I haven't seen anybody love a CEO like this. Again, we'll keep going back to Apple and Steve Jobs. It's amazing, right? That being said, we need to compare Tesla with that first mover advantage, with that big competitive advantage. Again, if you want to read this book, it's actually one of the classic books. It's one of the most important books that I have on my bookshelf. So if we take a look at some of the other electric vehicle stocks, there's Lucid, RIVN, GM, Ford, and then, of course, the Chinese electric vehicle stocks. If we take, look, today's cash flows, right, versus future cash flows. One of the biggest things that gets discounted in the market is the actual current price of the stock. We all know price earnings ratios and all that kind of thing, forward, backward, trailing 12 months, forward, right, that kind of thing. The stock market may, Benjamin Graham, Mr. Market fluctuates, gives you a good price once in a while, right? Let me tell you something. The market right now and the current price, regardless of some emotional extremes, they usually get it pretty spot on. Eventually, it floats back to the price that it's supposed to be. Our job as traders and investors in the stock market is to recognize when the market gets a little bit out of whack, is having a bad day, a bad week, or a bad month, and scoop up some of those values. We are paying for future cash flows. The market very rarely gets that wrong in the long run, which is essentially what Benjamin Graham and Warren Buffett do when they're talking about value investing. You're trying to buy that moat. You're trying to buy a discount to future cash flows. And the moat is that big window, right? That margin of safety that they're looking for. Now, Tesla might not be at a margin of safety when we're talking about that. We probably need for the stock to really pull back down, probably another 100, maybe $150 for it to be a classic value play. But if we take a look at some of these other stocks, $30, right? General Motors perked up a little bit, also in the 30s. Lucid down near all-time lows, actually, not that far from all-time lows. Ford can't seem to get out of this $10 to $15 range. NIO has all these problems, right? Hasn't been able to move. Also, can't get away from $20. It's been near 20 for a long time. XPEV, again, near historical lows, right? And then we work our way over to LI, which just had another offering, also pushing the stock down, right? I just can't get across that right now. I believe the way I'm looking at the competition, which again is a really unique way of doing this. It's not so much about the financials. It's about what are the odds of those cash flows continuing? What are the odds of somebody else coming in and squashing it? When you compare Apple and Tesla, or Tesla to Tesla company to the company Apple, you think about Steve Jobs, you think about Elon Musk, there is, and I dare I say it this way, there is a cult love for Elon Musk and for Tesla, and that's going to be a very challenging thing to do. Started to happen a little bit with Palantir, PLTR, but they don't have any cash flow. They're not profitable yet. Tesla is massively profitable. So from a competition perspective, from an investing perspective, a little bit long-term perspective, and the road back to $1,000 for Tesla, I actually think it's pretty good chance it's going to happen when you put all of those pieces together. Now, when? That's the thing. When, right? We all want to know when, and give me the timing, that kind of thing. You need to make a distinction between whether or not you're investing in cash flow for Tesla, whether that's dividends or capital appreciation, or are you actively trading Tesla, maybe using options if you can't afford to trade a $300 stock. Maybe you're looking to build swing trades in Tesla, looking up for that next level. We talked about this in Tesla stock before the earnings came out, which was over here, where the stock just kept trading sideways and there was really no edge at all. We said, wait for earnings to come out, and we got a really nice bounce. Again, this is the split adjusted stock, 230 up to 310, which is a pretty big move, right? Now what we're looking for in Tesla is we're kind of still stuck in this box again. If you really drill this home and you bring it down, there's not really a big edge to the current price action. If you are a fan of Wall Street and you're a fan of stock trading, and it's probably a book that you want to pick up, How I Made $2 Million in the Stock Market. It was a book written in the 1950s by Nicholas Darvis. Now, what's super interesting about Nicholas Darvis, it was called the box method when you're looking at price action. And actually, I think really the more interesting thing about Nicholas Darvis is he was a professional dancer in the 1950s, and he developed this method of trading stocks and a little bit longer term. And essentially what he did, his box method was essentially, it was in a box, and that's the right price for it right now. His job, his method was when it got out of that box and rallied, he'd get involved outside of this box, wait for this box to form, and then look for the next box up here. Now, that sounds ridiculously simplified, right? But I got news for you. Trading the stock market does not need to be complicated, but it needs to be consistent. Whatever way you choose to buy and sell stocks, it doesn't matter if you're looking to hold it for an hour and you're day trading stocks. Doesn't matter if you're looking at Tesla stock and you're looking to hang on to it for the next 3 months or up until the next earnings report. I know a lot of active traders trade what's called position trading, where it's not quite an investment, but they're looking from one earnings report to the next, and they're looking for those cash flows and for those expectations and the guidance to stay the same from one earnings report to the next. If there, and I dare use this word again, I'm getting crazy today with all these words. If I dare use the word secret to trading, the secret to trading is consistency in the way you set up your trades. If you know what you're looking for, you're no longer lost. And we talked about this in our Discord community yesterday, that the people in the stock market that are the most overwhelmed are trying to look at everything and trying to trade everything. That's not the way we do it, and that's not the way that we teach it in our community. And by the way, if you want to trade with me for a couple of weeks, click the link below the video. Our upcoming boot camp starts next week, I believe. The biggest thing that we do is we look at everything the same exact way every single day. When you know what you're looking for, you're no longer lost because you have the map. You either see it and you take action, or you know what you're looking for, and if it's not there, you preserve your precious capital. And this has been proven, and I don't use that word lightly. This has been proven inside of our Discord community day after day, week after week, where I am the first person to tell you, if there is nothing to do, preserve your capital. Now, again, with the VIX rallying a little bit, the VIX and the price of the VIX has been a little bit more expensive. It's been making bullish swing trades a little more stock specific, sector specific. We're going to talk about that in a second. When and if the VIX gets down below 20 and stays there, the volatility index, when it's at 20 or below, bullish swing trades are a little bit higher conviction level type ideas, but we're not there right now. We're actually much higher than that, which is making the bearish side of the stock market recently a little bit more likely to see follow through. So that's the breakdown of Tesla. So getting back to Nicholas Darvis, the box method, and taking a look at Tesla, we're kind of stuck in this new box. So you can see the box that we were looking at here before earnings, and now we're kind of stuck in this box. So now you have a challenge. Do we trade this box between 275 and 315, which is a $40 box where you're buying support and selling resistance, and you have definitive levels in there? That's one way of trading it. Now, the big thing with that is you can clearly identify your support. You can clearly identify your profit target. That makes sense on paper. But remember why we choose to buy stocks. If we have the guts to put our hard-earned capital on the line and we choose to buy stocks, we're buying them because we believe there is a good chance of our profit target being hit versus our stop loss. That's order flow, right? That's different than just seeing support or resistance. Just because you can see a buy level or a support level, that does not mean that you have an edge. That only means that you're managing the downside. We want a combination of the both. We want a likelihood of following through because order flow is pushing it in that direction, and we want to know the risk. So for me, the better opportunity from a bigger picture perspective is above 315. So if the electric vehicle group themselves, and I want to give you a little bit of a heads up on how to really plan this, you need to have all of these stocks in a watch list at the same time. So when they are all green or all red, order flow is flowing into or flowing out of those stocks. And you can see right now, as of yesterday, only NIO was. So what is the play? What am I looking for? What is the Tesla trade? What's the Tesla stock analysis right now? The Tesla technical analysis. You can trade between this box. I don't do that. I wait for order flow to have what we call room to go. I want to see it above 315, and then I'm going to look for that push back up to 385 or beyond. That's my outline and my game plans. Now, what's interesting about that is Tesla could be trading around right now. Maybe it does get up in that area. I want to trade where order flow is obvious. So right now it's stuck in that box, and the box is basically for 4 or 5 weeks at this point. So to me, Tesla big picture does not have an edge, but I love the edge over 300 to 315 to make a run up back towards that 385 level. So that's the next trade for me in Tesla. It doesn't mean that's the only trades we could be taking. That's the longer term position trade in Tesla heading into the next earnings report with all of that other news that we just talked about. If we bring over the market now and take a look at some of the rotation that we've been discussing, you can see as the market from start of the week heading into Monday, we still had some pretty decent picture on the monthly chart over the last 21 days. This day right here really clobbered the readings for the week and the month, and you can see that we've actually been staying a little bit more negative. Now, once we start to get into this kind of territory where everything is red, I want to be clear about this, the likelihood of dip buyers coming in starts to increase. Now, we know Jerome Powell and the speech that he gave last Friday morning at 10 o'clock crushed the market. They did not like what he said. But since then, we had selling Friday, Monday, Tuesday, and now we're heading into Wednesday. Again, early in the morning, I'm going to go on record. I'm going to give you the exact level. Okay, now this is what's important. This is really how you break down price action. So we're going to head back over to the SPY, and we're going to take a look at some specific price action. And this is where my level of aggression for today is going to end up opening. So let's take a look first at the futures. And you can see the futures have actually turned positive a little bit, kind of heading back up over the last little bit of price action. Now, one thing I want to talk about here as well, I know there's a lot of people in our community right now Pre-market action in the futures is absolutely something to know. You absolutely want to mark off the high and the low. So you have significant reference points. But my gosh, have we seen a change in tone in the pre-market futures action, not leading to the way the market trades when the market actually opens at 8:30. And yesterday was a perfect example of that. The way the market was actually strong pre-market yesterday, and then we got clobbered pretty quick. So that's the pre-market action and the mindset for the pre-market action. It's good to know those levels, but we're trading the real time. I don't teach trading pre-market. I don't teach trading after hours. It's just so much easier to trade normal market hours, 9:30 to 4 o'clock Eastern time. But more importantly, what am I looking at today, right? So we just broke down the market. And if you've been following us for a while, you know that everything we do is sector rotation. Even though basic materials got clobbered over the last couple of days, I'm actually going to be looking for a couple of basic material stocks today, and I'll give you those stocks in just 1 second. Energy also cooling off a little bit. Financials kind of perking up a little bit, but I'm not looking there. I'm looking at energy, and I'm going to continue to look at basic materials. So what does that mean? First, we're going to break down the market and what I'm looking for in the market. So if we take a look at the SPY and we take a look at where we are, yesterday's low is the big level for me. So if we go here and we map this out and we draw this line, this is a critical thing. This level right here, which is, let's just say 396. So that's the big thing we're looking at right now. So game planning, again, writing it down. You must do this. You have to have your game plan. It has to be written out. The more clear your trading game plan is, your stress level just goes down to levels you can't even imagine. There's no stress anymore. You're just following the plan. So the game plan for today, from a market perspective, from a big picture stock market perspective, for me to have a little bit of conviction on the bullish side today to be a buyer, is I need the SPY, the S&P 500 ETF, to be above yesterday's low, which we just talked about is 396. And you can see we're actually trading a little bit above that right now. But the reason I just talked about that before with pre-market action has not been has not been leading to follow through when the market opens. So here's what I'm looking at. Wherever the market opens today, and specifically the SPY from a short-term perspective, I'm looking at to carry us into the next few days heading into the holiday weekend. So that's my game plan. If that unfolds, then I will be and the SPY holds 396 as support. And let's say within the first half hour of the day or the first hour of the day, if that happens, then I'm going to shift my game plan from stocks that have been bearish and short selling over the last, let's say the last week. Now I'm going to go to the other side of the market. If the SPY holds that bid, especially within the first hour of the day, I'm looking for follow through Wednesday, Thursday, and Friday, and I will be looking at stocks that have relative strength, which means you need to have a list of stocks that are already showing bullish order flow. And you can see the sectors are kind of broken down. Energy is a little bit weak there, but this is really where you start to come into the list of stocks that are already showing strength. So these are stocks that are strong for the month of October. These are stocks that are strong for the last 10 trading days. So what that means is we are building a list of stocks that already have buying pressure while the market's going down. So if the market, what we call, holds the bid, if the market catches a bid, it's not our job to go and buy the stocks that got beat up. It's our job to already have a list of stocks. And again, if you come into the boot camp with me, I give you this list every single day. You're literally going to get my research, 2 hours of research. I just give it to you. Those stocks, which now are basic material stocks and energy stocks, are going to be at the top of the list for me. So I'm just going to walk you through. There's 2 stocks in basic materials today that I like quite a bit. And I'm looking for dip buyers to step in and buy the dip today. And that's Alcoa and CF. Now, CF, if you remember a couple of days ago, we talked about we're looking for it to pull back to 110 to 112 and find an entry. Now, it's kind of interesting. I'll just pull up those charts just so you have a clear picture of those 2 charts. And let's pull up the daily chart. We're going to first take a look at CF. If you remember, we said we were going out a little bit further and we were looking for CF to hold this 110 to 112 level. Now, and we said we were looking for it to happen in 2 days. Now, here's where you need to have the entire piece of the puzzle mapped out, for lack of a better way of putting it. If you're going to buy stocks, everybody knows, right? Moving averages go up, stocks pull back to moving averages, and you look to buy the 20-period moving average. You look to buy the 50-period moving average, right? The part that traders miss is you still need price action to stop before you start to get in. So that's reason why there's order flow, tape reading, and the last part is the optimal entry, which is where you have a clear risk reward that the stock has actually stopped going down and you have some signs of life that there's bids. 110 to 112 was the area we expected that to have happen in CF. It didn't, so we didn't get in. We didn't get in front of the market going down, sectors going down. So now we're looking at a better opportunity today because the distance between the entry and the target has now expanded. So if we take a look at CF, and it's very similar to the idea that we talked about before, is yesterday's low. It looks like we're a little bit lower. I'm actually hoping the stock actually pushes down a little bit, finds some buyers, and gets back into the 106 area at that level. The other idea I'm looking at is Alcoa today. We mapped out this trade in Alcoa. It looked really good after this reversal candle and spiked back up, came back with the rest of the market, and now it's hovering right around 50. And you can see how significant the 50 level is once, twice, 3 times, 4 times, 5 times, 6 times, and just pulled back to 50 again. So both Alcoa, AA, and CF stock, I am looking for relative weakness on the open to follow through, and then I'm looking for the buyers to step back in, and I'm going to join them again if we can get back above yesterday's lows. If they open lower and keep pushing down, I'm just going to leave them alone. So how do you do that, right? Well, it's 8 o'clock. It's 90 minutes before the stock market opens. You might be watching this video a little bit later. If you are, I really appreciate that. You set alerts. You set alerts at a price level that matters to you, as we just outlined. So now we know the price that we're looking for in the market in the S&P 500. It's got to get above and stay above 396. It's above 396 pre-market. It's around 398, right? So we take a quick look at that. If it stays there, fantastic. And you can see we're actually rallying a little bit more. If it stays there, great. That's step 1 in the plan. Step 2, which stocks do I put into my trading platform that already had buying pressure? So the buying pressure, the strongest buying pressure over the last, let's say 3 to 4 weeks, has been basic materials and energy stocks. So those are the ideas that I'm leaning on to trade today. Now, the big thing with energy stocks is we've been talking about crude oil, and we've been looking at this level right here, which is that's Colgate. Crude oil right around 95. And you can see it actually pulled back a little bit. So now, again, remember what we just talked about in the S&P, and we said that 95 has been a big level in crude. It got back above there, looked like a bullish price action, and pulled back, right? So if I just said I'm looking to go into the day and buy energy stocks as they've just pulled back for a couple of days, I also need to see crude oil hold the bid. I need to see crude oil stop going down. That gives me more conviction to get in there and bid for those stocks. So remember, the best way to set up the market, I'm going to show you this again because it's really critical, quite honestly. And you want to take a screenshot of this. And you might have seen me pull this up before, but it's called the stock market power pyramid. This is where conviction comes from. You have the 3 major indices, the Dow, the NASDAQ, and the S&P. Then you go up 1 level to the sector. Then you go up 1 level to the group. So you might have the Dow, the NASDAQ, and the S&P. Then you might have technology stocks. Then you might have solar stocks. And then you might have one stock such as Run. What we're setting up right now in energy stocks is the bigger picture. Although we're still using the big 3 in the market, we also know to keep an eye on crude oil. As crude oil moves, these energy stocks are also going to move. So if crude oil holds the bid, that's language for buyers stepping in and stopping it from going down, then I will be looking into the energy stocks that are already strong over the last 3 weeks to month. Then I will look to buy. So what you want to write down out of everything I'm talking about right now, if this happens, then I plan to do this. The problem and the overwhelm that a lot of people have is they don't have, if this happens, they only run alerts. And they're like, oh, it hit the alert, I got to buy it. And they buy too late, or they buy while it's still going down. They're not setting up probability of following through, probability of hitting the target, and defining their risk. Usually people only do one or the other. Quite honestly, most people only look to see how much money they can make. And then when the market turns around, they freeze. That's something you can learn from me. Understanding how to preserve your capital while you're learning how to read what we're talking about today. And it doesn't take that long. You just need a little bit of repetition, and you need to ask me questions in real time when we're trading together. So I'm looking for the S&P ETF, the SPY ETF, the S&P 500 to stay above 396. If that happens, I will be looking for stocks to buy. I'm also looking for basic material stocks, and the ETF for that is the XLB. If the XLB, I'll show you that really quickly, finds support right here. If this finds support, material sector, then I'm going to be looking to be buying Alcoa and CF. Now, I also gave you the price action that I've already mapped out. So think about what we're talking about now. This is where trading can become infinitely easier and quicker to get profitable if you follow the steps, if you even have steps. Again, if you want my steps, you could have my entire course and get mentoring from me. Just click the link below the video. You can learn about the bootcamp. I'd love to see you on the other side. If you decide to do it on your own, please remember, if this happens, then I plan to do this. The problem that most traders have is they do this even if the first part doesn't happen. They just want action. They just want to get involved. And that's where a lot of smart people get in trouble. You should not be trading the stock market for excitement. You should be running a trading business that you are now the money manager for, and only putting your capital in harm's way when there's a really good chance of it hitting your profit target versus your stop loss. And that's really the difference between being a chart reader and being a trader. When you are a chart reader, you're looking for patterns. When you're a trader, you're setting up probability with risk and reward. And the way that we do that, obviously, is with order flow, tape reading, and looking for the optimal entry. So we got a bunch of stuff. You might want to watch this video one more time, put it on fast forward. We got a lot we talked about a lot of stuff today, but I think the most important thing is I hope I am giving you some more insights, and trading could probably be a lot easier than you're making it right now if you know what to look for and if you understand how to interact with that. And that's really just order flow and finding the right entries, right? So anyway, if you want to learn about the bootcamp, click the link below. I'd love to see you there. If I did a good job today, please do me a favor, hit that thumbs up button and hit the subscribe button if you haven't done it. New education's coming out soon. All right. Have an awesome day, everybody. Thank you for joining me. I will speak to you soon. Take care.